All right, let's talk about the Corporate Transparency Act really quick. My name is Nick Preusch. I'm a CPA and attorney here in Fredericksburg, Virginia. And this is one of the more interesting acts. It's not an act that's like just passed or anything. It was actually passed a couple of years ago. 2019 is when I think it first came about. And what happened was Congress said, hey, what we need is all these people are money laundering, doing bad stuff through business entities, right? Because no one is trying to do financial crimes through their own name. You can't just, hey, I'm going to do a financial crime. Let's do this. No. What they do is they form an LLC, corporation, something like that. Then they do their money laundering, other financial crimes through that entity. The U.S. has very little in the terms of rules saying who actually owns these companies. So the purpose of this act is to start figuring out who owns businesses in the U.S. because really it's one of the things that we don't really know a whole lot about. And so, like I said, passed, I think, in 2019. And then finally they said, hey, it's going to take a little bit, but we're going to get regulations and we're going to say how we want this disclosed. In 2022, late September, we got final regulations saying what's going to happen with the disclosures and how are these going to get disclosed. So basically what we have is two different people that need to report. We have domestic corporations, or domestic entities, I should say, not just corporations, and we have foreign entities. Domestic corp is anything that's kind of registered in the U.S., doing business in the U.S. Foreign corp is registered outside the U.S., but they are registered in some state with some Secretary of State to do business inside the United States. If you are one of those two, you need to file with FinCEN a report that basically says who the owners are. Now, there are some exceptions. The exceptions are a little bit weird, though, right? Because typically when we talk about, hey, this person is exempt, it's because they're a small business. We don't want to put undue hardship on small businesses. But remember, the purpose of this act is really to say, hey, you are money laundering, you are smuggling funds, things like that. Odds are it's not a multinational corporation like Apple. So honestly, when you go through the exemptions, there's 23 exemptions in all. And it's mainly saying, hey, if you're a big company, you do not need to worry about filing this. And with those, is what they really care about is them small businesses, right? Because it's, the single guy who is out there with the LLC that's running funds through that's doing that money laundering. It's not, Apple, Google, Meta, any of those. It's small businesses that really these are running through. So that's why we need the disclosures through the small businesses. And when we look specifically, what is a large business versus a small business? The regulations tell us that it's 20 FTEs in the U.S. It has an operating presence in the U.S. It filed a federal tax return in the prior year, and it had more than $5 million in gross receipts or sales in that prior year tax return. If you meet all three, you are a large operating business, and you don't need to report. If you do not meet all four, then you are considered a small business and most likely will need to report. So that's the general idea of who has to report. So the next question that we ask ourselves is, when do we report? And reporting now we know is going to start 1/1/2024. So when we talk about 1/1/2024, we have two branches, right? We have businesses that start before 1/1/2024 and businesses that start after 1/1/2024. Any business that started before 1/1/2024, we'll call them legacy businesses. These legacy businesses, they are going to have an entire year to file their report if they need to. So they'll have until 1/1/2025 to file this report. New businesses will have a 30-day window basically to file the report after they are formed in the U.S. So odds are whenever we're doing our corporate structure and corporate formation, that is when these are going to get filed. And to kind of jump into it now, I think really what we want to talk about is who's going to file these. And I think you're probably going to see the attorneys do most of it. I can tell you from a nationwide standpoint, we've already seen some firms come out and say they're not going to do these, some accounting firms come out and say they're not going to do these because they worry that this is going to border on practice of law. So generally, you can't be a lawyer if you're not a lawyer. And a lot of firms, I think Ernst Young was one that came out and said it specifically, said, hey, we think this is practice of law. We will not be handling this for our clients. We don't want to get in trouble for lawyering when we're not supposed to. So that between now and, when these first go live is going to be a major decision point that you're going to have to make as a firm. Is this a practice of law or is it not a practice of law? And depending on how you decide that is whether or not you're going to do it. If you want my opinion on it, I would say it's probably a practice of law. When you look at the regulations, 5 U.S.C. 500 specifically, and what that authorizes CPAs and EAs and lawyers to do before the IRS, I don't think it reaches to here. And as such, it starts saying, hey, yeah, this is probably more a practice of law area. And even still, if you're not a CPA, maybe there's an issue there. If you're not an EA, maybe there's an issue there. But then, it is a following with FinCEN, and FinCEN is the same one that does the FBARs, so maybe not. I always take a conservative approach. I'm very risk adverse, and as such, right now, how everyone's explained everything to me, and especially since larger firms are kind of backing away from it, the practice of law is probably where I would go for. But that is one that you kind of got to weigh for yourself and figure out and wait for your client's needs, because maybe your clients is going to need these done, and that's going to be an issue. It could be, if you are an attorney, maybe it would be a good branch off if we do consider this a practice of law to make your own branch, just doing these reporting requirements. So what ends up getting reported? We do have the business's name, street address, place of business, jurisdiction that they're formed, EIN, and where they're registered. We do need to report beneficial owners. Like I said, the main thing with this is we're really trying to figure out who is an owner, who actually owns this. So we got to go back and say, if it's a tiered structure, we got to go to who eventually owns this thing. And we're going to say the full legal name, date of birth, address, and we need an ID number. ID number is going to be an unexpired passport, state ID, driver's license, and an image of whatever document we're using. It has to be the same. It's going to go forward, and it's going to be the same used for a registered officer. Typically, it's considered an applicant, but that's generally registered officer, what you're seeing in most state. If we have a new company, if any info gets changed, then we do need to update that within a 30-day period with FinCEN to let them know. Same thing if we figure out, some of the information is inaccurate. If some of it is inaccurate, then we will have a slight window, 30 days, that we need to go and update it in order to make sure that they know who is the actual owner. So who is the beneficial owner? It's going to be an individual. It has to be an owner that has either that can exercise substantial control or owns at least 25% of its ownership interest. One of the two. So if you exercise substantial control or you own at least 25%, you are getting reported. Ownership is direct or indirect. So that means attribution rules. So related parties are going to have to add their ownership together. So if you have a husband, wife, daughter, son partnership, each own 25%, they're all considered owning 100%, and they all get reported. For substantial control, too, the regs also say it includes officers who appoint, remove senior officers, anyone who has substantial influence over the most important decisions of the company. So those are two things that we really kind of want to look out for, because it might not be a person that's just putting on the owner. So if we are following these, it's going to be another thing that we want to ask our clients. And the last one I want to talk about, too, as for what we know so far, is this FinCEN identifier. So we do have all these owners, and a lot of these owners probably don't want to provide this kind of information or documents to their accountant, attorney, whoever ends up doing this, right? So owners can actually register with FinCEN themselves and get an ID number. And then whenever they have to be registered as a beneficial owner, all they do is provide that number to the company, and the company will report that, and it matches it up. So the company doesn't have to go through the process of passports, driver's licenses, anything like that. The owner can do that themselves, get a number, and send it over. There's a 30-day window to update or correct if we do find mistakes on that. So that is one of the things that you want to look out for. So for what we know right now about the Corporate Transparency Act, I think that pretty much covers it. So really, if we're talking about next steps, 2024, once it starts, we're going to have to ID clients that are going to need to file and let them know about the filing requirement. Where we go from there is going to determine, do we think this is a practice of law? Do we not think it's a practice of law? But I think as their accountants, as their financial advisors, either way, we have a duty to advise, right? We have a duty to at least tell them, hey, this is the thing that you need to do. Because really, their attorneys that filed their incorporating documents 10 years ago aren't going to be reaching out to them, most likely being like, oh, hey, you got to file this now. So I think as us, as at least their most trusted advisor, we have a duty, we have an obligation to tell them about this. So we do have that. And then if we figure out, hey, no, we're comfortable saying it's not a practice of law, then we're going to have to prepare them. So we're going to have to start gathering the information, maybe doing some walkthroughs with the owners to get these ID numbers, things like that. So that's probably going to be a tax year after the 2024 tax season to start really gearing up for if we're going to prepare these ourselves. But again, either way, I do think we have some kind of duty to at least inform the client and let them know. So that's what we have for this topic, and we'll see you in a new one.